Welcome to the Greed Geek Podcast with your host, Jason Byrne.
What is up, everybody? Welcome to episode 9 of the Greed Geek Podcast. I'm your host, Jason Byrne, and today we're going to give you a foundation that you need to get started in swing trading. My guest today is Dan Brigham. He works in sales for a tech startup, and he recently launched an e-commerce product in the health and wellness space. Dan has been actively swing trading for the past 4 years, and he wants to share some of his tips with us today. Dan, what's going on?
What's up, Jason? How are you?
Not much, man. Got my second dose of COVID, feeling fine. So that's the good news so far.
Nice.
If I pass out halfway through the podcast,
we'll know what it is.
Call somebody, give me some help. But start off. Tell me a little bit about yourself, your journey as an investor.
Sure. Yeah. So you kind of mentioned I've been actively trading for roughly 4 years. Really, I'd say over the last 2 years, I've probably been focused on purely swing trading. And, that's where I've really seen the most success. I've tried day trading. I think long-term investing is a really great mechanism. The reason why I started to focus on swing trading was because I was able to start getting, 5 to 10% gains across my portfolio each month. And so really what I've been focused on in the last couple of years is just taking as much of my income and just pushing it into the market every year. And so part of that has turned me into what I would consider like the epitome of anti-materialism, where, even today I still drive a van. I think I thrifted this shirt for like $4 or $5. And, my goal isn't to be like a penny pincher, but I think I look at every dollar as like, that's not just a dollar loss, that could be potentially $20, $100, maybe even $1,000 down the road. And so it really forces me to think about how I spend my money every single day.
And when you think about your goal in investing, is that for an early retirement, or kind of what are you thinking as far as that goes?
Yeah, exactly. I think like everyone always talks about like do what you love for work, and I wish I could say I like figured that out, but I think for me, I'm just super passionate about getting to a point where I can just live off that 5 to 10% and really just retire, right? Mm-hmm. But what retirement would look like is maybe me just trading for 10 hours a week, and so that's really the goal, is like how do I unlock that lifestyle? And I think it takes an element of dedication if you want to do it sooner rather than later.
Right. So in the course of doing this show, we've talked about a lot of different styles of investing. We talked about long-term trading. We did a little day trading, talked about crypto, but we haven't talked about swing trading. And it's not something that I'm personally familiar with either. So describe to us what is swing trading and what makes it different?
Yeah, that's a good question. So, I think swing trading really falls into between like the two categories of like day trading and long-term investing, in my opinion. Where like day trading, it's you're super quick, you're in and out. You're not holding anything for longer than a day. And with long-term investing, I think the goal is you pick something that you love, and whenever it falls, you're just adding to it because you believe in the long term that it's going to have a ton of potential. Where swing trading falls into that is, in the most basic philosophy, you're buying a dip and you're selling at the high point. The way that I add some method to that chaos, because obviously if I could do that 100% of the time, I'd already be retired, is, essentially you incorporate some rules into that chaos so that when a stock behaves in a particular way or starts to show a certain pattern, you know how to scale in or scale out.
Is this simply looking at, hey, this stock usually trades up to 60, then I've noticed it go down to 45 and back up? Is it just a repeating pattern, or is there other complexities to that?
So that's like totally one way to do it. I think that wouldn't work necessarily for every stock, but if you look at stocks like Coca-Cola, Walmart, Disney, you can use sort of like analyst ratings from sites like TipRanks or Morningstar, for example, where you can find a fair value for a stock. And so if I were to go look at Coca-Cola, I'm not sure what it's trading at right now, but let's say the fair value is $60, and I noticed that it got hit and it's at $42. Like in theory, I should just be buying that over and over again because Coca-Cola is not going to go out of business. I
Right.
don't see anything really changing about their business. So like it should go back up to $60.
Right.
So that's like one method, but obviously like in practice, it's a little bit more complicated than that.
So it's a little bit like, I mean, from what you just described, it's a little bit like value investing,
Mm-hmm.
except for like you're not looking to hold it until it gets up to that fair value. Is that right?
Yeah, that's really true. And the other part of that is oftentimes it might trade at $42, but when momentum carries it, it might shoot up to $70.
Mm-hmm.
So really what you're trying to look for is consolidation after a stock gets hit. So you don't
Uh-huh.
want to just buy a stock that got hit because there might be a really legitimate reason why it got hit. You're looking for, certain plateaus where buyer and seller pressure are meeting after a stock got hit. And
Yeah.
then you're looking to maybe scale into that. So as it rebounds, you can ride that back up. But at the same time, you're not just so heavy on a stock that if it continues to fall, you're, losing both time and money in the process.
Yeah. So, maybe I'm a swing trader. I bought some Pepsi. I noticed Pepsi had a really strong earnings report, and then it dropped, and
Mm-hmm.
I for no feasible reason, and I bought it as it dipped, and now it's come up and made 17%. Does that make me a swing trader?
That would be definitely. I think that's totally a form of swing trading. I think swing trading can look like a bunch of different things. Like personally, I like to use technical analysis, but
Okay.
you can swing trade using fundamentals. I mean, you could just purely gamble and swing trade. I think the premise of swing trading is like your aim is to buy it and sell it at some point. You're not trying to hold it forever.
Gotcha.
You're really trying to like hold it for a certain period of time that's longer than a day.
Mm-hmm.
For me, that's usually a couple of weeks, or on the longer side, probably like 3 or 4 months.
Okay. And what are some of the indicators that you look for?
Yeah. So, I mean, there's so many indicators that it can get like, if you're looking at charts, it can become really like you could just have like so much going on that you don't know what the heck to do. So I've tried to just stick to a few basic things. I use a couple of moving averages, and I use RSI, which is, like basically like the strength of recent velocity. And I use something that's called MACD.
Okay.
That's me just like describing them, but I can definitely like explain like what all those are and how I
Yeah,
use.
pretend like I'm an idiot. I don't know what any of those mean because I don't.
Yeah,
What
yeah,
are
that's fine. So imagine like you're looking at a stock chart. You can, the pattern that I use, you can actually use. It's fractal, so you could use it across any time frame. So if you didn't want to use it for day trading, you could. You could use it looking at a weekly chart, daily, a 5-minute chart. Essentially, I look at it as like a daily chart, and I look at the 20-day moving average, which, given that you can't trade on the weekends, basically represents what the average price has been over the last month.
Mm-hmm.
It's a lagging indicator, but it can help you start to see if a stock is breaking down or if it's trending up. There's like a really famous saying that the trend is your friend until it ends. And so you use the moving averages to spot the trend. When price breaks above the moving average, that's a good indication that the trend is going up. When price breaks below the 20-day moving average, the trend is likely down. Now, it doesn't always cleanly just cross and go in a breakout and cross below. So that's why we use things like RSI, which RSI is the measurement of essentially like the recent price changes over the last 14 days. You can change it and kind of customize it, but like the standard usage of it would be, price changes over the last 14 days. And the numbers between 0 and 100, it typically stays between 30 and 70. So if you look at really stable stocks, you'll never typically see it go below or above those numbers. And so if you do find a company like Pfizer or Coca-Cola or one of these like big blue chip stocks, and it's dipping below 30, that's a good indication that it's on a price extreme. In this case, it's being oversold, or it's maybe underpriced. Whereas on the flip side, a lot of times what people do is they chase stocks that are running up,
Mm-hmm.
and you can easily look at the chart and see that it'll be at 70 RSI or above 70, where like it's just being overbought. The analogy I use for my friends is like, you walk into the Gucci store and they have all these bags, right? And this one's on sale for $200, but it's worth $1,200. Like, would you rather buy it on sale for $200, or would you rather be in there on the day where there's everyone trying to buy a Gucci bag and they're selling them for $2,000? Like, it's RSI is basically a measurement of like supply and demand.
Okay.
The last one is the MACD, which it stands for it's like moving average, convergence, and divergence, which basically it's taking two different moving averages and then it's subtracting the longer moving average from the shorter one. So like the standard one would be like the 200-day moving average, which is price over the last year. And then it's subtracting that from price over the last 20 days. So this helps you understand momentum of a stock. And so essentially the MACD will fluctuate above and below zero, right? Because sometimes the 20-day moving average will be higher or lower than the 200-day. And so as those converge or as they reach zero, depending on the direction it's coming from, you can start to get an indication of which direction momentum is going. And so let's say it's approaching zero from a negative. That'd be a good sign that momentum is trending in the positive direction. And so as you start to look at stocks, you'll start to notice that you'll find these companies where the MACD is approaching zero, the RSI is pretty low, and you'll see the moving day average where price will start to cross that line. And it's like all these indicators will start to add up where you can start to say, okay, like these things are all pointing to a bullish move. And so it's a way of adding, as I mentioned, like some sort of like rules to the chaos of the market.
Yeah. So let me get this right. You're not looking for something going down and saying, oh, I'm going to catch it down in the trough. You're actually trying to catch something as it has come out of the trough and is starting to go back up.
Yeah. I definitely don't want to catch a stock that's just free falling. Sometimes like if I see something that I just like love, like if like a stock that I think I've traded like six or seven times is Virgin Galactic. It's like, Richard Branson, like everybody knows who he is. It's like, why would you not want to invest in like something that he's behind? But like the company will just have these huge swings. And so sometimes when I see it just plummeting like that, I'll just watch it. I'll just watch it every day.
Yeah.
And what I'll start to look for is as it's free falling, where does it start hitting consolidation, which basically means that now the buyer and sellers have met, and that's usually a good indication that not necessarily that it's going to go up, but that it's probably hit, a level of support where I could maybe take an early position.
Gotcha. And so is that different from momentum trading, or is that just the same word, same thing, different words?
I think so. Like the way that you would apply this to momentum trading is with momentum, you're probably not trying to catch bottoms. So I think of price in four stages where there's like, let's say after a big fall, price is just going sideways. That'd be like stage one. Stage two would be that breakout. Whereas a momentum trader, you'd be just buying those breakouts. And then it hits stage three where you'll notice that after a rise up, the same way it goes down and goes sideways, it'll go up and go sideways. It doesn't always happen for a very long period of time, but it'll start to do it. And so as a momentum trader, you're looking to really just trade that stage two. Whereas what I'm doing is I'm essentially trying to buy during that stage one. And then I'm kind of confirming like during that stage three, maybe I'll scale out a little bit, but I actually won't close my position until stage four, where now the trend is showing me that it's about to go back down.
Okay. And do you when you see the indicator where you want to buy in, are you like buying in all at once, or are you kind of like buying in a little piece and then waiting for confirmation to go in harder?
Yeah. So like when I first started trading, I was totally going all in at once. And, essentially what you're doing when you do that, you're like, this is the bottom. Like, I know
Right.
it. You're basically like calling out that you think this is the bottom. And so what I've started to do instead is just kind of like inch into a trade. And if you look at, I don't know, I know you don't do a ton of swing trading, but if you have been paying attention to the market the last couple months, stocks have just been continuing to go down. And so if you're someone who had bought in during one of these stage ones thinking that you're at the bottom, you're probably down 30 or 40%. And so it's much better to have maybe like a quarter position when that happens and just keep buying it on the way down. Because the other part of this is I'm not looking to just buy a stock just because of the chart.
Mm-hmm.
I'm also, while fundamentals don't drive my ultimate decision, I'm not going to just buy a company just because the chart looks good. I do want to buy quality stocks. And so if it goes down, like, why wouldn't I just keep buying it? Right.
Mm-hmm. Okay. And so do you sometimes turn into a long investor then because, you end up buying as it goes down?
Yeah. Yeah. I remember, like right before the pandemic hit, I had like a pretty good position in Lyft. And then, obviously they were just like smashed when the first hit. And I was like, look, like, I think at one point it hit like $12 or something. And I was like, Lyft is not going to go away. Like they're, you know what I mean? Like they just have too much momentum. And like, I think between them and Uber, like they're both going to come out of this okay.
Mm-hmm.
And so I just kept adding to it over time. And eventually, like, I don't remember exactly what happened, but some really good news came out and I was able to like eventually scale out. But I was in the trade for like 7 or 8 months, which really stunk because it was holding up a lot of my money. But because I'm a bit of a cheapskate, I'm able to keep pushing money into the market. And so I think like a key thing is when that does happen, a lot of people I've noticed, they get $30,000 or $50,000 maybe into the market, and it's easy to get comfortable. But like a big portion of like getting to that retirement period is to continuously push and to not get comfortable. Like,
so Dan, are you not putting stop losses on those trades then?
No, because what I found with stop losses is like something may like come out of the box, like it may dip below that stop loss, and then it just comes right back into the trade by the end of the day. And so you get stopped out for a second, and then it just comes right back up, and then it takes off, and
So I mean, you're not always going to win this. So at what point do you? I mean, talk about maybe some of the ones that you've lost on, and when you make that decision to pull the plug.
Yeah. So the ones that I've lost on, it's definitely like a little bit tougher. So it's not that I don't, it's not that I ignore where that support line is. I typically look at where it closes. So, the market might start off down. This stock was down 5% and it's below my line of support. I'll wait until sort of like the market begins to close. And if it's still well below, then I'll take the loss. But typically what you'll see is if you give the market a little bit of time, it'll come back in. And so it's sort of a delicate thing. And that's why I don't use stop losses.
Okay. One question I meant to ask you a while ago is what tool are you using? Because you're having moving averages, you're looking for patterns, RSI, MACD. I don't know where you even see some of these things. Like the moving averages I've seen on some of the charts, but where do you even find RSI and MACD and all those other things?
Yeah. I mean, the honestly, like the best trading platform, if you use TD as like a brokerage account, you can use Thinkorswim.
Okay.
But obviously, like not everyone uses TD. I used to use, before I had a TD account, I used this site called stockcharts.com.
Okay.
And it's completely free. And I think you can like pay and they'll let you like save certain stocks. So if you're like one of the things that I used to do, because I used to pay for it, was I would take Kathy Woods, who's like, she's like in charge of ARK, which is like, she's like one of the top hedge fund investors right now. And
she's on my crap list because I bought ARK in February and now it sucks.
Yeah. She's a beast. But I used to go through and I'd look at her portfolio and I would just save it so that I could go into stockcharts.com and just quickly like find every one of the charts and just like scroll through. But you don't have to pay for it. You can just go on and they let you put all those indicators on. It's super, super easy to use once you understand a little bit about like what you're trying to measure.
Okay. Yeah, that's a new one for me.
Yeah.
Stockcharts.com. Okay. So you're ignoring you're not really looking at the fundamentals, but you are, looking at some of the what do you call them? The advisor, ratings and things like that. So
Yeah.
how much do those weigh into your decisions?
Those are a big impact. And like, I think like one thing that can be intimidating sometimes about stock trading that people told me is like, I don't have time to do this. I don't have time to go through earnings reports and I don't have, you know what I mean? And it's like, yeah, neither do I. Like, I don't want to go through 10 companies' earnings reports and determine which one I'm going to invest in. Like, that is a lot of work. So I sort of outsourced that through sites like TipRanks, which is completely free. Essentially, these Wall Street analysts will like make accounts and they'll give their sort of like fair value analysis of these companies. And so like they're way smarter than I am. Like I'd much rather hear what they think a stock is worth. You can also pay for Morningstar, which is not super expensive. And if you think about you have one good trade a month, it completely covers it,
Yeah. I'm asking this half jokingly, but what about all the Reddit due diligence? Do you ever pay attention to that noise?
I'd never traded any like the game stonks or like, any of that stuff, but I remember I was like going through like the memes and someone called out like silver and I just was like, I'm just going to like mess around. And I bought some call options and they like jacked up. And then I just immediately sold because I was like too scared. But yeah, I try not to buy into hype. Like I never got into like the Doge coins or anything like that. And like I like you mentioned crypto. I love buying crypto. Like I'm more of a long-term investor for crypto, but yeah, not big into like the hype stuff.
So you don't use that as a tool in your swing trading to kind of see the DD there?
Yeah, I have never used it in that way. Like honestly, I trade companies that I know.
Yeah.
Like one of the best things you can do is just look at the things that you own and like what kind of car do you have? What who made your home? Who did the loan on your home? What's your bank? Like all those things. And if you don't know the company, like go to their website, like go to LinkedIn and look at who their CEO is. Like those are like important things too, because it's really easy you find out about some electric vehicle company that is trading at 85 cents and it once hit $4 and then you get caught in this like pump and dump. And so I don't want to like neglect fundamentals. I do think you should be buying value and understand if a company is going to go under or if they're actually legitimate. I just think that there's really, really easy ways that you can like figure out the important things about a company and move on.
Yeah. So along those lines, are you always only swing trading on individual companies, or do you ever swing trade on ETFs or entire sectors, for example?
So the way that I use sectors is the same way that I'll look at a chart. So let's say I go through each of the 11 sectors and I notice that like retail is setting up for a breakout. I'll actually look into retail stocks and see like what retail stocks look really juicy. Because typically, I think of the SPY as like the wind, like whatever direction the SPY is going, like most of the market is going to follow. And so you can find individual sectors that are also trending. If you look at like right now, the price of lumber and industrials has skyrocketed. So that's just been a really hot area to trade. But like, if you weren't paying attention to the sectors, not too many people think that trading US steel is a very like, hot company to trade. So I use the sectors as more of a way to figure out where I want to focus.
Mm-hmm.
I don't really trade too many ETFs. I also do have a long-term investment account. And so I bought like BlackRock and
Mm-hmm.
ARK, and I try to like add to some of those, but you totally can trade all of those. And, especially if you look at like triple leveraged or leveraged funds, that's like you can totally get really great swings out of those.
Yeah, both directions, right?
Yeah. You got to have kind of, the stomach for if you're trading like a leveraged fund.
So if you find a sector that you feel like is hot, are you looking for an undervalued in that sector? For example, like let's say the airlines, and I noticed that Spirit Airlines is kind of lagging, the Deltas and the United. Are you like, is that where you look at an opportunity and say, hey, I'm going to jump into Spirit? Is that what you would do?
Yeah, that would be, the way that I would actually go about it is I use another site called Finviz, which I maybe use like a tenth of Finviz. Finviz is like insane. Like you can get lost on it. And but I use their screener, and I will like, I'm super biased. I will filter by US companies, and I'll also filter by a market cap of above 2 billion, because that's kind of like my way of sort of filtering out anything that might just be noise. But like, let's say I found out airlines was looking really juicy. I would then sort, and I'd say, show me all the airlines. And then I'd quickly look through what might be setting up. So I'm not necessarily only looking at value, because something like Spirit also, it could be at value and also be preparing to break out. Like it might actually, like sometimes like with these growth stocks, like it's really tough to purely trade off of value. If you look at
so how do you survey so many stocks? So you're talking about screening these stocks. And so I'm assuming you're not like, are you looking for PE? You're not looking for PE. You're looking for certain patterns. So so you're filtering the screener, $2 billion companies in a certain sector, US.
Yeah.
What was the next thing that you tick to find?
So the next thing that I do is I sort by RSI, because that's a quick way of.
And Finviz does that?
Yeah, Finviz does that. Finviz actually lets you, if you wanted to select certain PE ratios, you can actually filter out, by that as well. Like there's a ton of fundamentals that you can use to filter. I typically don't, but you could totally do that if you, let's say you wanted to only focus on like a bunch of companies that were just pure value. Like that might be a good way to.
But for you're sorting by RSI. So I want to get in your mind here. So you're looking for the next stock you're going to buy. You're sorting by RSI.
Yeah. So the first thing I do is I make those filters. I sort by RSI, and that's going to start to show me things that are oversold, right? And it's going to bubble up to the top, like the things that are the most oversold. And then
They're going to have low RSI, right?
Yeah, I'm looking at a low RSI.
Okay.
Yeah. Definitely not a high RSI.
Yeah.
So then I start to look at a low RSI. And then what I'll start to do is I'll go through, and typically things that are on a really like far extreme are still in like a free fall stage. Okay. So I'll look for companies, and honestly, I'll look for ones I recognize. If I don't recognize it, I'm less likely to buy into it. I might like be curious, and if I have some time, I might look into it. But typically, I'm just like scrolling through that list. I'm like, do I recognize that company? Oh yeah, and then I'll pull up the chart and I'll place my indicators, and I'll say, how does it look? And then I basically have like different buckets. I have my watch list. I have like, let's see what happens when the market opens kind of list. And then I have like the, you need to buy this like right away kind of list. And, and then obviously like I apply that same sort of technique to when I have my portfolio of like, hey, this is like not trending the right direction. You should watch this and make sure if you need to sell it, or like, hey, this is starting to look like you need to scale out. Like I have that list as well. Okay. So there's also an element of like maintaining your portfolio, because, I probably have 40 or so at any given time.
Okay. And how much time do you spend on this per day?
Oh man. Sometimes I just don't even like take any time at all. Like I think lately I've probably spent, because the market's been doing a lot less. Sorry, my dog is barking in the background. Um, I've been spending a lot less lately, just because the market hasn't been doing a lot, and like I'm kind of just fully in. So it's been a little bit tougher. But then there's weeks where I'll spend like 20 hours. I might spend like couple hours in a day because I've scaled out of something and I've got this cash and I want to figure out what's the next move. Or sometimes like it's really tricky because the market might be on an extreme and I'll be pulling out and I'll have this cash and I'll want to put it into something, but then I'm like battling with myself because it's like my emotions want me to invest in something.
Follow
like,
your own rules.
yeah, exactly.
Yeah, that's where a lot of people lose, right? When they let their emotions take over. So you got to suspend the emotions. What you want to do, you have to know what. I think that's in general. No matter what investment strategy you have to know your rules and you have to stick by your rules because that's what's going to govern you from doing something stupid, right?
You're trading against the smartest people in the world, right? Like these people are also trying to take your money. It's like it's very competitive, and I think a lot of people when they're trading from their phone like don't recognize that like the market can be super emotional and it's kind of competitive in some ways. And so if you don't have your rules, like think about the people that are at a computer like doing the algorithms, like
So going back to your stock, so you find something that's attractive, has the right RSI, you like the chart, you like kind of the fundamental, you're not trading on fundamentals, but you kind of like that the company is going to be around and probably move upwards. When you come in, do you have a certain target sell price in mind? Do you say, hey, I think this has 20% upside and I'm going to get out when it comes to 20%? Do you even set the sell right away, or are you just watching for when it gets overbought?
Yeah. So that is one of the things I look for is when it's overbought. I do go in with like some sell targets. Like price, if you look at a chart over, like look at it across like a couple of years, and price starts to have memory. Like it tends to go where it's been, both for better or worse. And so, I'll look at where is price consolidated before at above it. I'll also look at like if it's below the 200-day moving average, oftentimes stocks will have a little bit of support or resistance at those. So I usually go into it with a few sell targets. And then I also, anytime that the RSI hits 70, I immediately sell a quarter of my position. But the goal as it goes up is to slowly scale out. Like, people talk about you want to, let your winners run, right? Like, and so going into it with those targets is important, but you have to be careful that I think sometimes, especially if someone goes through like a losing streak, again, your emotions get the best of you. You're like, I have this winner, I have this 25%, I need to sell it before I lose, And so you sell it all at once. And then the next thing you know, like I traded, what was it, like Sunrun, and, solar like has just gone crazy. And I sold out. I was all pumped. I had 80% return. And then I checked back on it and it was up 400%. It's just like, oh, cool.
You have to be okay with those, right?
Yeah. It's tough, right? You got to feeling bad about 80%. It's
right.
Yeah.
Yeah. I bought Twilio. This isn't a swing trade, but I bought Twilio at 27. And I sold half my position at 220, and of course then watched it go up to 400. But I don't really feel too bad about that.
Yeah, that's
I think I can live with that, right?
Yeah, that's a really good rate. Yeah.
But conversely, I didn't sell my Discovery that I bought in January, when I bought it at 36 and saw it go up to 90.
Oh man, and then the recent sell-off.
Yeah, that wasn't too good. But anyway,
that was the time to be buying Discovery. One of the trades I just bought that I've been adding to is Viacom, because it was part of that hedge fund that was like trading on margin.
Right. Yeah, I'm actually I feel the same way, that those are probably getting way oversold, because they're still good companies with good momentum and good good streaming products. So
yeah, it's like Nickelodeon and
so those kind of things are potential targets for you. That and are they hitting those indicators that you're looking at?
Viacom is the most beautiful setup right now.
Okay.
It got hit. It is just consolidating. It's got
Mhm.
a really beautiful target. I think the target's like $65, which is like a 50%.
Yeah, it's right around 40 right now, I think.
Yeah, I've literally like, I probably added to it like 4 times in the last,
Nice.
yeah. So that's like a perfect, if someone was looking to learn, you can even see if you pulled up the 20-day moving average right now, it's
Mhm.
actually just barely, I think it's either like on it or about to cross it. So it's a really good, for someone that's like looking for this type of pattern, it's a really good example.
Yeah, so if you're watching this in late April 2021, then yeah, pull up the Viacom chart. Of course, it's really ugly a few weeks ago when it goes from 100 down to 40, but
Yeah.
probably has some
Funny,
upside.
like I always tell my friends, like I'm greedy when other people are fearful, and
Mhm.
I'm very fearful when other people are greedy. So like as crypto's going up, I'm like, uh-oh, like
Did you make up that quote? I'm just kidding.
I don't think I did.
Um, so so you talked about you're gonna start pulling out when it hits certain ranges. So are you hoping to hit some home runs, or are you really just hoping to kind of like average out with a bunch of like
Yeah.
medium returners?
I think like it's a matter of like what your risk tolerance is. Personally, I am going for singles and doubles. Like I'm looking for like the no-brainer trade where I have a really easy line to like 20 to 40%. Like that's beautiful to me. And if it goes higher, like perfect. The thing that I've found about these 100%, swings or more is that oftentimes you got to like handle being able to, like, the stock might go down 20% in a week and before it shoots back up. And yeah, I don't, personally, it's not something that I'm like looking for typically, but again, the pattern and the like trading philosophy that I use, that system is fractal, so it can be applied to any. You could use it to trade options. I totally use it to trade options sometimes if I'm really bullish on something. You could use it on you know, a 1 minute, 5 minute, 20-minute chart, and you could use it to day trade. Like all of this stuff, it's like applied over time. So, like I wouldn't say to someone like you can't do it that way. I just personally don't.
Yeah, so you want a lot of at bats, and you want to get take your profits when they come.
Yeah, and that's like the at bats thing is another great example. Like when I first started, I was like, oh, I got $10,000. I'm gonna put it into the market, and I think I bought like 3 companies. I bought like Zynga. I bought like Aurora Cannabis, and like I look back and I had gotten them for so cheap. I should have just like held them,
Yeah.
but I bought them and then they moved a little bit, and I had never had money in the market. I started, when you're first starting out, like rather than just pumping a bunch of money in, I always try to tell my friends, like, just buy a couple shares of something and like test out the pattern. Imagine if you traded and made 300 trades, how much better you'd make, or how much better you'd be than if you made 5 trades.
Mm-hmm.
And you can do that with, not that much money. You just have to not take huge positions.
Mm-hmm.
So I think it's really important, if someone wants to swing trade, long-term investing is very different.
Mm-hmm.
But if someone wants to swing trade, just buy a couple shares. When I first started swing trading, I bought 2 shares of Starbucks. That was like my first ever trade.
Yeah. Yeah, I was telling you before the show, like that's kind of how I use my Webull, is like my playing around. Like I'll buy I have 1 share of Viacom CBS right now. It's because I think this is this is cheap, and I wanted to see where it goes, and it's just kind of fun. But it's but I'm not confident enough in my short-term trading ability. Yeah, I'm confident in my long-term trading ability, but not my short-term.
But
so you just get some practice, right?
And part of trading is just like staying in the game long enough that you can learn those skills. Like I've found, I personally like to think I still know nothing about the market. Like I think if you have an open mind to it, you can learn so much over time, and the value of getting better and better as a trader becomes very obvious, right? Like
Mhm.
you could go from 5 to 10% a month to someone that does 20% a month, right? Like,
So Dan, how are you doing? What is your record like?
yeah, I can't remember if I was already saying it, but usually like 5 to 10% a month is what I aim for.
And that's the average. You're making 5% month average. So
Yeah.
annually, you're making 50%. Like, what are you making?
Yeah. I mean, last year was, kind of, I'd say like a little bit more wild. I think I finished at like 100 and something, 150%.
Jeez.
But like, yeah, my aim is to end around like 70% on the year.
Wow.
That's like my personal goal. And it seems like really, really daunting, but again, like if I apply this strategy to 5 companies, I don't even need to hit on all 5 of them. I can hit, or on most of them, I could hit on 2 of them. And if I get a 30% upside and I know where my target to sell out is,
Mm-hmm.
and I sell out at like a 5 to 10% loss,
Mm-hmm.
like I'm still net positive on each of those.
So if you go back 4 years of your history, and let's take the wild ride of COVID out, like
Yeah.
you're really making about 70% annually?
I mean, the first 2 years, I had no idea what I was doing. The first
Okay.
2 years, I like lost money. Like
Okay.
I like paid the piper trying to day trade, trying to like just, like I remember I'd like see a pretty stock and I'd go and I'd chase it. And then there'd be
Mhm.
another one and I'd chase that one. And it was really over the last 2 years where I started to develop that. And like, I think, like my first year I did well, but I was trading with very, very minimal. And then over COVID, I've really like invested heavier. And, my goal by the end of the year is to be doing this with 6 figures, which like I might be able to do faster than I'm actually doing it. But there's also this risk tolerance because like at any day, I'm looking at my account every day. It might be up or down anywhere between 3 or 5%. And so like I'd probably have a heart attack if my account was down $5,000, like I'm not like emotionally ready to get there as a trader. So I think part of it isn't just how much money do you have, but how how much can you trade with where you can still control your emotions.
Mm-hmm.
Yeah. But yeah, I mean, last year was wild, but so far this year, like I'm still well on track to cross 70%. So
Making making 5 or 10% per month, every month this year.
yeah, I mean, so in March, I actually had one of my first like even months in a while, and and again, it's still about like learning. I think I talked a little bit about going into trades like less aggressively,
Mm-hmm.
and I went pretty heavy on a bunch of things, like feeling very bullish on them,
Mm-hmm.
and then when they sank down, I mean they're companies I believe in, so I kind of have stuck with them because I've just been dollar cost averaging.
Mm-hmm.
But as a result, during the period of March, my portfolio like it resulted in me being even.
Mm-hmm.
The good thing is with stocks, like if you don't sell them, you haven't lost yet. So
Yeah. So my last question for you is, when you go out there on YouTube and let's say I search for swing trading, and I'm going to run into all these get rich quick schemes out there. So
they all work.
right. But who are some of the people who you found have been the best
Yeah.
influencers?
So the number one person that I like attribute all this to is this guy I've been following for a very long time. His handle is full auto. His name's Gerald Peters. He's a really funny dude. He's like this, 50-something-year-old sort of like redneck out of Texas, and I just like love his story. He's like this guy grew up in a trailer park and like turned himself into like, what I mean, he's worth millions. He's not like ultra like Grant Cardone rich or anything like that. But I've literally I bought his book. I like studied his strategy. He goes live every Sunday at 9 a.m. Central, and he like teaches over and over for free his strategy. And I basically just even now, I still continue to study it and like try to perfect this craft. And like, he's like the person I would recommend to anybody. There's a couple other people that I also follow that they actually use a very similar strategy that he does, but they're a little bit more like new age approach to it. This one guy, I can't remember his handle, but his name's Chris Johnson. He runs a program called the Wealth Squad. He's a really great person if someone wants to apply this strategy to options and like really go big. And then I follow another guy, his name's Ashton Noland, and he's kind of like humor that he brings into this. And he's a little bit more like, he uses something called like Fibonacci lines, for example, which is really helpful if you're investing in growth stocks. That's an area that I'm not super strong in. So if someone is like really interested in like tech innovation and, you're talking about home runs, he applies this to those types of stocks. So like the full auto guy is kind of like old school, buying like Coca-Cola, Pepsi. Ashton Nolan is like the dude buying like Workhorse and Twilio and all of those. And then this Chris Johnson guy is like your options person, but they're all doing the same exact pattern analysis.
Okay.
Yeah.
Cool. So somebody out there is wanting to get started. Do you think they should start paper trading, or do you think it's better to throw a little skin in the game?
I mean, I think paper trading is really great, but the thing that paper trading doesn't do is it has nothing to do with emotions. So you just end up kind of like trading better because you ignore your emotions and you actually follow the strategy. So it's like beneficial because you learn the patterns. Yeah. But nothing beats having a little bit of skin in the game, and whether that's $50, $100, like, I think there's, to me, like, I think there's like this feeling of like, oh, I'm only trading. Like, I think you were saying, I've only bought one share of Viacom. Like, that's awesome. You're learning, you're putting in the effort, you're putting in the reps.
I still care. Sometimes I care more about that one share than I care about my nest egg. I don't know why.
Yeah. So I think like, the thing that I would avoid is again, like taking 20 grand, starting a trading account, and then feeling like you just need to like spend that 20 grand. Cause like the market might not be optimal for putting that 20 grand into right now. You might buy crummy stocks. You might buy great stocks that move down 2% and you forget, and then you're down $500. And
well, I think the whole thing is, you build up to it. You train like you're training for a sport, right?
Exactly. You wouldn't run a marathon tomorrow without training for it. And it's the same thing. Like 20 grand is still a lot of money. I don't care who you are. That's a good chunk of money to just toss into something and like hope for the best.
Okay. And this is really my last question. Stock picks. So again, keeping in mind when we're shooting this, which is April 24th, 2021, what are some of those things besides Viacom on your list right now?
There's so much juicy stuff out there right now because I feel like we've hit the official bottom of this like little downturn. I just bought some Teladoc, some Chewy. I gotta like pull up my notepad here. I like don't even know them all off the top of my head. What other ones? I think Stitch Fix is a really good one. I don't know. It might be too late for Skills, but like I went pretty big on that one. And then I think electric vehicles is about to rip back. I'm a big fan of Workhorse. They had a unfortunate news with they were like trying to get something passed with the USPS, but I still am a big believer. And then the Virgin Galactic one is actually setting up really nice too. But okay. But honestly, like right now is like a really easy time. Like this is like a moment where I think you could throw a dart at a dartboard and you could hit pretty well if you're just focused on innovation stocks.
Very good. Hey, it's been nice talking to you, Dan.
Yeah, likewise, man. Hopefully I talk to you in a week and we made a bunch of money off Viacom.
We will check in on that. All right, y'all. Thanks for tuning in. We'll see you next time.
Follow Greed Geek on Twitter and Facebook at Greed Geek, and follow on Twitch at Greed Geek TV.